We define recession-proof retirement stocks as those companies with an incredibly consistent track record of rewarding shareholders. These rewards can include dividends, share buybacks, or capital appreciation over time. By purchasing these stocks, investors can grow their wealth and ensure they have a comfortable retirement. Investing in simple retirement stocks may be a painful but profitable action to take right now, despite the market downturn. More established concepts are frequently successful as retirement stocks. As a result, this list features some of the most recognizable stock market companies that continue to rapidly increase investors' wealth every year. Let's now examine 12 stocks for retirement that are recession-proof that you should bet on for the long term. Next Generation Energy, ticker number 12. The largest electric utility stock by market cap, is the first simple asset that is suitable for your retirement portfolio. Next Age Energy won't produce the explosive growth rates you might find with tech firms, but it will nonetheless expand. With the stock market navigating through a period of increased uncertainty, investing in stocks of basic necessities can be a wise move. Whether you own or rent a home, you'll almost certainly need electricity to power your appliances. NextEra Energy is the equivalent of a growth stock among electric utilities. As annual changes in electricity demand are minimal, companies like NextEra and its competitors can fairly precisely predict their annual cash flow. This openness is what enables management to set aside funds for acquisitions and new infrastructure investments without affecting profitability. The most recent period, no utility in the nation is generating more capacity from solar or wind power, so energy is effectively a growth stock within the utility sector because of its renewable energy focus. NextEra frequently used historically low lending rates to fund wind and solar projects, but these clean energy sources have also decreased the company's electricity generation cost, resulting in an annualized adjusted earnings growth rate of about 10% over the past year. Low single-digit percentage growth is being experienced by electric utilities. If legislation were to pass in the future requiring electric utilities to fulfill specific clean energy criteria, NextEra Energy would have a significant head start, including its dividend. NextEra Energy has produced beneficial results. For patient investors, the company's total return for shareholders in 19 of the last 21 years represents favorable odds. Number 11. The Chevron ticker, San Ramon, California, is home to CVX's headquarters, one of the super majors, or a member of Big Oil. Chevron currently has a market capitalization of $359.1 billion. Year to far, CVX has increased by an astounding 55.6% in stock value. Yet some people might be hesitant to invest in growth. Although political dynamics emphasize shifting toward clean energy, the hydrocarbon industry is likely to stay vital for a long time. So CVX is a consideration for energy companies to buy for the long term. Number 10. BCB Bancorp, ticker BIP. Leading regional bank, BCB Bancorp has locations in New Jersey and New York. The company's payout ratio of 24.6 indicates that there is significant room for dividend growth, and the stock has a low valuation, trading at 2.8 times forward sales. In its most recent quarter, BCB's sales increased by a healthy 24%, while its net income increased significantly. The company also reported stellar loan growth in the first 9 months of this year and is currently experiencing strong earnings. Number 9 is the iPhone ticker. Consumer electronics behemoth AAPL for long-term investors. Apple has been a fantastic business and wealth compounder. Apple's solid business, which continues to generate constantly increasing earnings and revenues, has been the driving force behind its eye-catching shareholder awards. Apple is one of the few tech companies that pays a quarterly dividend. This dividend distribution has grown for 9 consecutive years and now yields about 0.6. In addition, the company is a heavy buyer of its own shares, buying back more of its stock than any other company, making it easy to overlook the rather lackluster performance this stock and the market have seen recently. Choosing Apple shares as a retirement investment is simple because its business is as strong as ever, and we anticipate that figure to rise for the foreseeable future. Number 8. BKV, the Berkshire Hathaway stock ticker. Although Warren Buffett is a tremendously successful investor, his track record as CEO of Berkshire Hathaway demonstrates that he is not entirely reliable. One of the top long-term investments for any investor, Berkshire has a fantastic average yearly return of 20.1%. Warren Buffett has done a wonderful job selecting stocks that have endured and continue to generate returns that are above average. Several cyclical firms that are in line with the U.S. economy are part of Berkshire's investment portfolio. As expansions normally last considerably longer than recessions, cyclical stocks are excellent investments. The company's portfolio also boasts a wealth of dependable dividend stocks. Given the health of the economy, the corporation will receive more than $5 billion in dividends this year, which is a huge cushion. Number 7. Ticker MRK for Merck. Keytruda, a cancer treatment that generates a lot of revenue and makes up a significant portion of Merck's enormous revenue base, is the company's most popular drug. Despite being one of the most successful and profitable pharmaceutical companies, it has largely been overlooked due to the controversy surrounding coronavirus vaccines. Merck has a strong track record with sales growing by 9.5% year in its most recent quarter. Company sales shot up 14% from the prior year period to $14 billion, generating earnings per share of 1.85 cents or 14 cents over consensus estimates. Sales from Keytruda to climb 26% to $5.4 billion. In addition, the company's papillomavirus vaccine called Gardasil has impressively complemented sales of Keytruda over the years. Because of how well it is done, Merck has been able to maintain its aggressive dividend profile with a dividend yield of over 2.7 and 11 years of increased dividends. The 6th KMI ticker for Kinder Morgan. Since fuel prices have recently been strong and are likely to continue for the foreseeable future, Kinder Morgan is a business that can withstand economic headwinds fairly well. Additionally, the company's distributability makes it a good investment. Kinder Morgan is a top midstream player in the energy sector. It has interests in or owns 141 terminals and 83,000 miles of pipelines. The energy giant currently offers a remarkably high 6.1% forward dividend yield with 5 years of consecutive growth in payouts. In addition, the company paid out approximately 56.6% of its distributable cash flows as dividends, giving it enough room to grow its payments, while also making new investments in its pipeline infrastructure. Number 5. IBM ticker. International Business Machines. In the past few years, International Business Machines brand has evolved, and it has forayed into new profitable industries. International Business Machines is a large tech company that was long forgotten in the tech world. Its competitors had invested in new areas like blockchain, cloud computing, and the Internet of Things to keep up with the changes in this market, while Big Blue maintained its popular hardware business. The company is experiencing strong growth in the new parts of its business portfolio, such as consulting infrastructure and software, which are key growth areas. Additionally, IBM has an attractive forward yield of about 5%, and its investors have witnessed dividend increases for 22 years in a row. IBM has also kept itself safe from the weaker parts of the market, like services for consumers. Number 4. Ticker for McCormick & Company. McKC. Since its brand is associated with the food industry, McCormick & Company is a leading manufacturer of spices, condiments, and seasonings. Its operating performance over the past 5 years, in which it has grown its sales and earnings by single-digit margins, demonstrates the company's growth and stability. The company has grown organically and through strategic acquisitions. Moreover, McCormick's investments in its sales channels have enabled the company to boost sales without negatively affecting its profit margins. Over time, gross margins have decreased marginally, but given the company's outstanding business performance, this is not very worrying. MKC is a dividend stock since it has increased its dividends for 36 years in a row and has a forward dividend yield of little under 2%. Those who are getting close to retirement should consider purchasing number 3. There's no denying that Amazon, ticker AMZN, is one of the best stocks to buy right now. Amazon is seen as a simple stock by one renowned investor as well. Legendary value investor Bill Miller told CNBC in January that the shares were ready for a rebound and called it one of the easiest names in the market at the time. In fact, Amazon stock has already started to recover, up more than 20% year to date, after falling nearly 50% in 2022. We expect the tech sector to recover. Titan's momentum will persist for a number of reasons. Moreover, inflation seems to be slowing down, which is excellent news for Amazon, which has attributed most of its sluggish growth to inflationary pressures on customers. Also, the company is cutting costs, which should increase profitability in 2023 and beyond. Even if macroeconomic headwinds don't abate, Amazon is still a fantastic long-term investment for investors since it still has strong growth possibilities in its core e-commerce and cloud hosting businesses, as well as new chances in healthcare and other sectors. Second place ticker Mercado Libre, MLE. Another excellent e-commerce option is Mercado Libre, which is also a top financial provider, similar to Amazon. Investors were let down by Mercado Libre last year as the stock fell by 37%. However, so far in 2023, the stock has increased by around 40%. Don't be shocked if Mercado Libre increases that handsome profit in the upcoming months, as the company now controls the Latin American e-commerce market, while its rival Americanos is mired in an accounting scandal. Although Mercado Libre's market position might yet be improved, we are even more optimistic about its fintech potential. Because so many individuals in South America don't use standard banking services, there is a tremendous growth opportunity for the organization in this underserved region. And the first place pharmaceuticals goes to Vertex Pharmaceuticals, is a Boston, Massachusetts-based American biopharmaceutical business with the ticker VRX. As the market as a whole suffered last year, the company's share price increased by more than 30%. There is a lot to appreciate about this stock, and Vertex is off to a really fantastic start in 2023, with a double-digit percentage increase already. Vertex has a monopoly on cystic fibrosis, CF, drugs. As a result, the company is essentially a money machine. However, there is still plenty of room for growth in the CF market, which can be achieved by securing additional reimbursement agreements and regulatory approvals for its existing drugs in younger age groups. In addition, Vertex has its sights set on important markets outside of CF. The company and its partner CRISPR Therapeutics sought approval for Zazzle so that it can be used to. Vertex also believes that VX548, a promising non-opioid pain treatment, will soon be approved and launched on the market. This novel therapy may offer an effective alternative to opioid painkillers without the negative side effects or misuse potential. With VX548, Vertex believes it may have a multi-billion-dollar market opportunity. The 12 simple retirement stocks to buy in 2023 are now complete. Which of these stocks would you consider adding to your investment portfolio? Let us know in the comments section below. As always, it's important to conduct thorough research before spending your hard-earned money to buy stocks or make market investments. Don't forget to like this video. Thank you for watching, and good luck with your investments. Subscribe to our channel for weekly updates on the top companies to purchase and cutting-edge financial ideas for building wealth. Be sure to check out our next upcoming video for additional financial and wealth education.